Good evening. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up. And this is for Friday night. And we're sitting here about 6:25 p.m. Central Time. And this is December 4th, 2020. You know, the amazing thing, again, we're back to one of these situations where the market is paying no attention to the COVID headlines. It doesn't matter that hospitals are bursting at the seams, turning patients away, a death rate climbing, and Dr. Fauci saying that the worst is yet to come. We're at the beginning of this, not even at the plateauing stage or approaching it. Scary stuff, yet the stock market enamored because maybe we'll get a $900 billion deal done between the Democrats and the Republicans for a COVID relief bill. I'm not saying it's right or wrong. I'm saying, remember the glass half full, half empty? It depends how the market decides to focus on things. For the moment, any relief, financial relief, overwhelms the market because there's a vaccine coming and the market sees beyond that. That's just what's going on. Today we saw the silver hold, came back up, gave up a chunk of the gain, in fact most of the day's gain, but it tried to stick its head up. You can't stop this copper, it just keeps moving to the upside. This is a breakout over the 350 level. Let's see if it can hold it. And the platinum came alive today as well. Dollar index trying to stabilize. Now, late in the day, remember, they closed these markets. The settlement is what I should say. The settlement comes in well before the markets finish trading. So these markets are even higher than this, and you would reverse down even more than that in the euro. But let's take a look if we could. And remember what I said, this is your weekly edition. So we'll start off with the monthly chart, and my gosh, this market just doesn't stop to the upside. This is your 18-month moving average of closes. This is a new all-time high. At this point, we're only December 4th, all-time high monthly close, intramonth, if you might say, as we're up already 2% for this month. You realize you were up 10-12% in November. What if you add on to that? I mean, it's pretty crazy, but the odds don't favor it being a big month up at this point. We'll see if it works out, and that's because you're up so much in November. When you come to the weekly chart, you gained another 1.7% roughly. A new all-time high weekly close. Oh yeah, that you do have on this. And you've got the same on the weekly bar chart, as you can see. Now, when we put the swing line on, the pattern of the chart is one of higher lows and higher highs. Until the market takes out 35, 42, 25, that pattern sits in place. The support in the market is the 18-week moving average of closes, which is over the 100, over the 200. It's a classic bull setup. Where's the resistance in the market? It's literally right here. If you take a look, you're fighting back and forth at that upper Bollinger Band, market sitting it there. If you get Bloomberg, go take a look at their article this morning on Bollinger Bands with the monthly chart action. Now, whoever wrote that doesn't quite interpret it the way that I do, but it's interesting because they're coming to the conclusion that the market is setting up now for a break because it's over the Bollinger Band. I'll leave it go with that. I think I do better with the explanations. But suffice to say, you're fighting right now on the weekly chart at that number, and when you put on the slow stochastic, you're overbought on a weekly basis. So important. Remember, how do you get rid of the overbought condition on a weekly chart? You either embed where both numbers that make it up go sideways over 80, that's my interpretation, or the market breaks down, and if it breaks down and takes out this 35.42, might mean you're going back into the 34.40 level. That's one way to interpret it. NASDAQ, overbought, trend up, running against the upper Bollinger Band. Now, you don't stay over these bands very long on these markets. And I don't see this as a breakout pattern. It could be, but I'm not seeing it. There's so much money on the sideline. So many people are scared they're just missing out on these markets that they keep getting bought. When the correction comes, it'll be a son of a gun. You might want to take a look at how many of the S&P stocks are trading over their 200-day moving average. It's rather surprising. So is the market getting frothy? It might be. When you come to the S&P, to get to these valuations, you do realize how many stocks have to trade at 180 in order to get it. That I was looking at the studies on these. It's very, very fascinating on what you'd have to be. But that's what people are doing. They're plying into the marketplace even after the monster November gain. You're up another 2% in the NASDAQ. In the Dow, you're just holding against that number. You're not here doing anything other than, like the others, overbought to the upper Bollinger Band in an uptrend. Hard to buy into that at this point in time. And in the Russell, this market's launched and it's got the embedded reading. Now, I don't care if a market's embedded or not. When it's over an upper Bollinger Band, I think it's very dangerous to be buying over that number. That doesn't mean you can't get back under it. Now, if you were to crack 1745.10 and lose that number, the red line back under 80, you could be in for a rude awakening here with over a 200-point break, should the market decide to retreat to the 18-week average of closes. It's not looking like that at this point. In the 30-year bonds, the market, as I said with how I started off, the market is looking at the government spending. It is not looking at COVID. It's decided, as bad as COVID is, the vaccines are coming, that we may not get as many as we want for a 2-week period that we were supposed to get, but so what? It's right behind it. Well, that's putting pressure every time you're now hearing that we might get a relief package. The market's now pressuring the bonds, the TLT, BND, whatever you're watching, and that's the plays that I'm seeing. Same thing in the 10-year notes. I'd be watching this week's high for the next 2 weeks, which was 138.20. If you should take that out, the odds would favor you're going back to neutral zone. Is the market going to be able to break out of all this? And that's the other thing I'm looking at. Look at the sideways action. Is this a top? And I know I'm probably the only one out there saying it, but if you come back here, did we top and this market's already coming down the other side? In other words, are we looking at the 10-year note going to be 1% very shortly? Could be. Dollar index under the lower Bollinger Band. You've done that before, and then you end up basically either rallying or going sideways. I don't see any change this time. Am I in the bear camp? You betcha. Do I think the dollar can get down a lot more than this? I do. So I'm one that still thinks, hey, I go with where the market flow is. If the market thinks that any COVID relief or infrastructure or other relief packages, when the whatever administration takes over, January 21st is going to come into play after that time frame. You're seeing that being built into this right now. That's the negative, and this is the positive. Are the markets getting maybe extended too much? Yeah, I can see that too. You only stay 5% of the time over a Bollinger Band, and you did come out of somewhat sideways action, but not classic like I call that pipe on the daily charts. In the Canadian dollar, up and away. First off, they're adding more jobs. If you saw their data today, their economy looks good. And again, against the US dollar, everything is weak at this point. Are we overdone? Yes. You're over the upper Bollinger Band. You're overdone. You'll only stay over it 5% of the time. From where it breaks is the trick, and certainly I'm not bearish that market. Japanese yen. Trend is up, higher lows, higher highs. I hate this ugly look of this part of the chart, and I've said that, and you're overbought in this market as well. Bitcoin, I'm going to repeat what I said before, buying over a Bollinger Band, no. But what this market's done is that gorilla glue trade. It's when the market starts hitting the upper Bollinger Band, and whether it stays over it and gets back under it to relieve that pressure, it doesn't leave it. That's a sign that a market's just climbing, and that's what I'm seeing with the embedded reading. Until that embedded reading loses, then for a pullback, yeah, but right now, it's just the never-ending bull market, and that's not a bad thing. That's what the market's doing. Then we get to the differential between Brent and WTI, and as I see it, what OPEC did is friendly. Now, why is it friendly? Most people would say, you know, they're going to increase more production. I understand. But what's the market mentality? The mentality at work in the marketplace, at least temporarily, is that if We get COVID relief packages, be it in the US, be it in Europe. Remember, we have the European Central Bank meeting coming up this week. Whatever it's going to be, the market's looking at it as the glass is going to be starting to get full again. And therefore, with OPEC, what the Saudis did is they elected not to make a big battle out of a 500,000 barrel a day increase in January, as long as it's looked at regularly. Let's face it, they all need revenue, all the OPEC members. So instead of fighting that it's got to be our way and we can't do any production increases, they went with the minimal, and you can see the reaction to the market is friendly. I want to be clear. I never tell a client to buy over a Bollinger Band. Not changing that attitude now. Same thing goes in the WTI. By the way, the rig count went up. I think it was 5 or 6 in the rigs for oil. We lost 2. I think it was 5 in the oil rig count. We lost 2 in the natural gas that's down so much. So net 3 rigs. We're still about half of where we were a year ago. And I put out in my written report today for my clients that, we're still exporting about 40 million barrels a day in the U.S. People don't realize that. We're still a net exporter, even losing all those rigs. Rebob gasoline, still bullish. Higher lows, higher highs. Resistance, 130, let's call it the 133 level. Support back at the 18-week average at 118.90. So I put that all together, and I still see friendly markets. Now, I've got a special going. Don't go away from me. A lot of people want my charting course, and I charge for it. In fact, I just raised all the prices for it. I'm giving it away free if you want to buy my research for 1 year. Any package I have. All you do is you go to our research package. You go to our website, www.iraepstein.com. You look at the research packages. This shows you what I do with them, and there's ETF packages and futures. Buy a 1-year package. I will give you the charting course for free. $199.95 value. The package for this particular video is what? $156. The ETF video just for a year, $159 or so. So the course is worth more money than that. It's limited time. It's my Cyber Week special. How do you find out about it and do it? It's pretty darn simple. You go to our website right here, www.iraepstein.com. Go to the word in their futures, away you go. I did send out an email to everybody on our list. We've had a lot of people take advantage of it. We can give the course away to somebody that you want. So you might want to buy the research. You've already taken the course before. I'll give another course and we'll give it to your friend, whatever it is, the full course. I'm Ira Epstein. You take it from there. You have a good weekend. I will see you all Monday.